The moment I realized banks aren't safe for me anymore, everything inside me cracked. I'm talking about that split second where you feel the system tightening around you, quietly, silently, like a trap closing before you even know you're inside it. I used to believe banks were the safest place in the world until I saw the signs nobody talks about. Tiny hints, strange delays, sudden restrictions, moments that made my stomach drop because I knew something was wrong. And I knew it was happening to me. And in that moment, I understood the truth wealthy people never say out loud. When banks become risky, you don't panic, you pivot. And that realization changed everything. I remember the exact moment everything shifted for me. It wasn't a headline, it wasn't a financial crash, and it wasn't a government announcement. It was something much smaller, something so ordinary that most people would have ignored it. But for me, it hit like a crack running through a foundation I thought was solid. I walked into my own bank, the same one I'd trusted for years, and for the first time in my life, I felt like I didn't belong there. I felt like a stranger sitting inside a system that wasn't built for people like me anymore. I can't fully explain why the feeling came over me that day. Maybe it was the way the banker looked at me when I asked a simple question. Maybe it was how suddenly uncomfortable they became when I asked about my own money. Maybe it was the way they spoke, like everything I owned, everything I worked for, every dollar I ever saved wasn't really mine. It was theirs, and I was supposed to just trust them with it. And for the first time, I realized how fragile that trust really was. You know what scared me most? It wasn't the answers I got. It was the answers they refused to give. I asked myself a question on the drive home that I had never asked before in my entire life. If this system was truly safe, why did it feel like everyone inside it was hiding something? That was the moment the fear started creeping in. Not panic, just fear, the quiet kind, the kind that whispers instead of shouts, the kind that makes you look back at your own life and wonder how long you've been blind. For years, I believed the same thing everyone is taught to believe. Your money is safest in the bank. I repeated that line to myself like a prayer. I built my life around it. I structured everything around it. But that day, sitting in my car, staring at the building behind me, I felt something I'd never felt before. Doubt. Real doubt. The kind that doesn't go away. I tried brushing it off. I tried pretending it was nothing. But deep down, I knew better. The moment a person starts questioning the foundation they stand on, the structure shakes. My structure shook that day. I didn't tell anyone about it. Not friends, not family. I didn't want to sound paranoid or dramatic. But inside, the confusion tore at me. How could something so trusted, so stable, so regulated suddenly feel dangerous? I realized the problem wasn't that banks were failing. It wasn't that the system had collapsed. It wasn't anything dramatic like that. It was something worse. It was the feeling that the people who run the system no longer cared if it collapsed. And once you feel that, once you see that, you can't unsee it. That day marked the turning point. The moment I started paying attention to things I had ignored for years. It was the moment I stopped believing what I was told and started watching what was actually happening. And what I saw next, the cracks, the signals, the patterns, they didn't just open my eyes. They changed the way I see money forever. And that's where the real story begins. After that moment in the bank, something inside me stayed awake. It was like a switch had flipped. Suddenly, things I used to overlook started feeling off. Little signs, small irregularities, strange behaviors. None of them looked dangerous on their own. But together, they painted a picture I couldn't ignore. The first crack I noticed wasn't even about money. It was about behavior. I started watching how fast banks were changing their tone. One month they were friendly, warm, overly helpful. And the next month they were cautious, defensive, almost afraid. Policies changed, access tightened. Questions became procedures. And anytime I pushed for clarity, I got the same robotic answer. It's just protocol, sir. But when every protocol starts limiting your access instead of protecting it, something's wrong. Then there were the delays, strange ones. A transfer that used to take seconds suddenly took 24 hours. A withdrawal that should have been immediate required an approval. And every time I questioned it, they acted like I was the problem. Like wanting access to my own money was suspicious. That's when I knew something deeper was happening. But the real crack, the one that sent the biggest chill through me, came during a casual conversation with a friend who worked in finance. He told me, off the record, that banks were becoming extremely cautious behind the scenes. Not because everything was safe, but because they were preparing for stress scenarios. He didn't explain what that meant. He didn't have to. The look in his eyes told me enough. That night I couldn't sleep, not because of fear, but because of recognition. I realized I had been ignoring the signs for years. I had seen the sudden bank closures on the news. I had heard the stories of people being locked out of accounts for routine checks. I had watched governments change rules overnight like it was nothing. But I never connected the dots until now, and then it got worse. I started noticing how banks were subtly shifting responsibility. Every new form, every new disclaimer, every new policy was designed to tell you one thing. If something goes wrong, it's your problem, not ours. That was the moment it hit me. Banks aren't built to protect me. Banks are built to protect themselves. And if something ever cracks, they will save themselves first. I will be second, maybe third, maybe not even on the list. Once that truth sinks in, you can't function the same way again. Every time I logged into my account, I felt the tension. Every time I saw a temporary service disruption, my stomach tightened. Every time a banker smiled at me, I wondered what they weren't saying. The cracks were everywhere, not giant, dramatic, easy-to-see cracks, the small ones, the dangerous ones, the ones that only show up when you're finally paying attention. And as those cracks got bigger in my mind, one question grew louder inside me. If the system is this fragile beneath the surface, where do the rich put their money instead? I didn't know the answer yet, but I was about to find out. There comes a moment in your life when you stop hoping a system will protect you and finally admit it never was designed to protect you in the first place. That moment hit me harder than I expected. I remember sitting alone, scrolling through headlines, watching people lose access to accounts overnight, watching banks quietly freeze withdrawals, watching customers get treated like liabilities instead of depositors, and something snapped inside me. I said it out loud, even though no one was in the room. Enough. I'm done pretending this system works for people like us. For years, I believed the myth that banks operate the same way for everyone, same rules, same benefits, same safety. But the deeper I looked, the more obvious it became. The rich and the ordinary live in two different banking realities, and the system doesn't even try to hide it. It simply hopes you're too busy, too tired, or too trusting to notice. I saw how wealthy people operate, how they maneuver, how they negotiate. They don't beg bankers for access. They don't sit in lines. They don't get interrogated when they ask for their own funds. They don't get told, sorry, sir, we can't release that much today. They have relationships, influence, leverage. Meanwhile, ordinary people are handed rules. Rules that tighten, rules that restrict, rules that shift overnight without warning. And I started asking myself the question that changed my entire worldview. If banks are truly safe, why do the rich keep their real wealth somewhere else? That question ate at me. Because the truth is, banks are not built to make people wealthy. They're built to keep people compliant. They hold your money, but they hold your future tighter. And the day I realized I was depending on a system that saw me as a number, a risk even, I felt something Carl Icahn himself would agree with. If you're not in control, you're in danger. I stopped thinking like a saver and started thinking like an investor. I stopped asking, is my money safe in the bank? And started asking, why should I trust the bank at all? And here's the strange part. Once I allowed myself to ask those questions, the truth was impossible to ignore. The rules were never meant to protect people like me. The stability was an illusion. The trust was a convenience. But the rich, they move differently. They don't wait for disaster. They don't panic when markets shake. They don't pray banks stay stable. They build structures outside the system. They create safety nets that don't rely on someone else's promises. They don't depend on banks. Banks depend on them. The moment that clicked, everything changed for me. My fear turned into clarity. My confusion turned into direction. For the first time, instead of feeling powerless, I felt awake. A little angry, yes, but awake. I finally understood that the financial world is not equal, not fair, and not balanced, but it is understandable. And once you understand it, once you think like the people who never fear bank failures, nothing looks the same again. That was the day I stopped waiting for answers from the system. I was ready to find my own. When fear first hits you, your instinct is to freeze. That's what most people do. They panic in silence. They wait. They hope someone smarter will fix the problem. Someone bigger will step in. Someone stronger will keep the system afloat. But the rich, they don't wait. They don't freeze. They don't sit there hoping the storm will pass. They pivot. That realization changed everything for me. I understood that I couldn't keep living like the system was unbreakable. I couldn't cling to the comfort of old habits. I needed to shift mentally, emotionally, financially, and that shift started the moment I decided to stop being a spectator in my own financial life. The wealthy have a different psychology. Their confidence doesn't come from the bank protecting them, it comes from their ability to protect themselves. They don't rely on hope, they rely on strategy. When they see cracks forming in the system, they don't panic and scramble to withdraw cash. They adjust their entire structure. They reposition assets. They diversify risk. They tighten their circle. They strengthen the parts of their portfolio that don't depend on trust, only control. And the day I adopted that mindset, the fear that used to sit in my chest finally loosened its grip. I started observing how rich people behave during uncertainty. They don't check their accounts every 5 minutes. They're not watching the news with anxiety. They're not wondering whether their bank will stay open. Their minds are focused on one thing. Where do I move next? Not emotionally, strategically. I thought about every moment I had ever depended on the bank to keep me safe. And I saw how flawed that thinking was. The bank was never my safety. My safety was in my decisions, my awareness, my willingness to pivot when the world shifted beneath me. That's when I began to redefine what security meant. It wasn't about deposits or statements or balances. It was about having assets that could survive when systems couldn't, assets that didn't sleep inside a vault owned by someone else, assets that kept working even if banks stumbled, assets the wealthy trust, not because someone told them they're safe, but because history proved they are. I wasn't ready to list them yet. I wasn't ready to share them yet, because before I could talk about those assets, I needed to understand the mindset behind them. The rich don't choose assets randomly. They choose assets that give them power, control, independence. They choose assets the system doesn't fully control, and that's exactly why the system rarely promotes them. And as that truth settled in, I realized I wasn't afraid anymore. I was focused. I wasn't overwhelmed. I was alert. I wasn't doubting myself. I was preparing myself. The rich never wait for disaster to confirm their fears. They act before the rest of the world wakes up. And in that moment, I wasn't thinking like a depositor or a saver or a customer. I was starting to think like them. I was ready to pivot. And that pivot would lead me straight to the 5 smart assets wealthy people trust. The same assets I was about to discover for myself. When I finally opened my eyes to how fragile the banking system truly was, I knew I had to find something, anything that gave me real control. Not the illusion of safety, not the promises on glossy brochures. I wanted something that didn't require asking permission, something that didn't freeze, pause, delay, or disappear during a technical issue. That search led me to the very first smart asset rich people trust long before they trust a bank. Real, tangible, income-backed real estate. And wealthy people love it for that reason. They understand that in a world where numbers on a screen can be frozen with a click, physical assets are the closest thing to real security. That first property opened my eyes to something bigger. The rich don't keep their wealth in banks. They keep their wealth in things banks can't control. And real estate was the first piece of that puzzle for me. It wasn't just an investment. It was the first moment I felt safe outside the system. It was my first real safety net. The second smart asset I discovered didn't come from a book, a podcast, or a seminar. It came from a conversation I wasn't even supposed to hear. One of those rare moments where life pulls back the curtain and lets you peek into how the wealthy really move. I was at a private dinner. Nothing glamorous, just a quiet gathering of acquaintances and business contacts. At the far end of the table, 2 seasoned investors were talking in low voices. Their conversation wasn't about stocks or crypto or real estate. It was about something most ordinary people don't even think about: precious metals, especially gold. Not gold jewelry, not collectibles. Real, physical gold. Bars, coins, vault-held, insured, untouchable by banks and governments. I leaned closer without trying to be obvious. One of them said something I'll never forget. Banks can shut down, systems can crash, currencies can die, but gold doesn't ask for permission. I felt that. I felt it all the way home. The next morning, I started digging deeper, and what I discovered shocked me. The wealthiest families in the world, old money, generational money, private wealth, hedge funds, quietly use precious metals as their hidden protector. Not loudly, not publicly, quietly, strategically. Why? Because gold doesn't rust. Gold doesn't default. Gold doesn't get hacked. Gold doesn't freeze during a banking crisis. Gold doesn't need a CEO to survive. And more importantly, gold doesn't rely on trust. It relies on physics. It relies on scarcity. It relies on history. The banks can fail. Fiat currencies can crash. Digital systems can glitch. But gold has been valuable in every era humans ever lived through. Banks hate this truth. Not openly, but they do. Because when you own physical gold, your wealth sits outside their control. They can't freeze it. They can't lend it out. They can't run fractional reserves on it. They can't use it to solve their problems. And that is exactly why the rich hold it. My personal experience with gold began shortly after that dinner. I bought a small amount, just enough to test the waters. And when I physically held it in my hand, I felt a kind of calm I had never felt holding paper cash. It didn't feel like investment potential. It felt like certainty, like I was finally holding something the system couldn't tamper with. Over time, I built that position quietly, the same way the wealthy do, not to get rich from it, not to speculate, but to protect myself from the unpredictability of the system. Banks can fail, gold doesn't. Banks can deny access, gold doesn't. Banks can run out of liquidity, gold doesn't. Banks claim to be safe, but gold is safe, and that's why the rich rely on it. It's their silent firewall, their protective shield, their unshakable backup when everything else goes dark. Real estate gave me stability, but gold gave me protection. And it was only the second piece of the puzzle. There's a moment every investor experiences, that moment when everything around you starts shaking, markets dropping, banks tightening, news headlines screaming fear, and you suddenly realize which assets were real and which ones were just pretending. The third smart asset I found didn't just survive those moments, it paid me during them. And that's when I understood why rich people love dividend-paying stocks from recession-proof companies. Not the speculative stuff, not the hype, not the next big thing. I'm talking about the companies that are so embedded in daily life that they earn money even when the world feels like it's falling apart. Utilities, consumer staples, energy, healthcare, companies that don't rely on trends, they rely on necessity. The day I understood the power of dividends was the day I noticed something incredible. While fear was rising, my accounts showed cash flowing in. Small amounts at first, but consistent, predictable, calm, like a heartbeat that doesn't care what the market is doing. That was new for me. I used to think stocks were just numbers that went up or down, controlled by emotions, manipulated by headlines, always unstable. But dividend-paying companies showed me a different kind of strength. They weren't paying me because the market was up. They weren't paying me because I got lucky. They were paying me because the business was still operating, still earning, still demanding payment for essential products people buy no matter how scared they are. During one market dip, when everyone around me was panicking, something strange happened. My phone buzzed, a dividend payment notification, then another, all while the world looked like it was collapsing. And in that moment, I realized why rich people rarely collapse with the system. Their assets don't stop paying just because the market stops smiling. This was the first time I felt confident instead of anxious during uncertainty. It felt like I had plugged myself into a quiet, unstoppable current, one that kept flowing no matter how dark the room got. And the more I studied wealthy families, the more obvious it became. They don't buy stocks to gamble. They buy businesses to get paid. Dividends became my quiet weapon, my steady income, my proof that wealth isn't about reacting, it's about positioning. And the best part, dividend companies don't panic. They don't need permission from banks. They don't freeze your payments. They don't send notifications saying service unavailable due to system stress. They pay because value is flowing. They pay because real customers are buying real products. They pay because the world runs on essentials, not hype. Dividend-paying stocks became the asset that didn't just protect me from volatility, they paid me through volatility. They became my calm in the storm, my confidence during panic, my reminder that wealth isn't about timing the market, it's about owning things that function whether the market cooperates or not. This asset taught me something priceless. Markets can shake, banks can freeze, economies can wobble, but necessities don't disappear. And the companies who provide them don't stop sending checks. This was the moment I knew I was moving correctly. I wasn't thinking like a depositor anymore. I was thinking like an owner, a shareholder, someone who gets paid even when the world holds its breath. And that's why smart asset number 3 changed everything for me. The fourth asset I discovered wasn't loud, flashy, or obvious. In fact, it was the opposite. Quiet, discreet, powerful, something wealthy people use to multiply their money while the rest of the world barely knows it exists. And to this day, I consider it the real wealth engine. Private businesses and private equity investments. Let me be clear, I'm not talking about starting giant companies or buying massive corporations. I'm talking about owning small pieces of real functioning businesses, the kind that operate outside the stock market, outside the banking system, outside the volatility that crushes ordinary investors. I used to think only billionaires had access to these deals. But then I learned something shocking. Wealthy people don't become wealthy because they have access to private businesses. They become wealthy because they focus on private businesses. I first stepped into this world almost accidentally. A friend introduced me to a small local business owner who needed funding to expand. Not a risky startup, not a dream on paper idea, a real existing business with real customers and real cash flow. The deal was simple. I would provide capital for growth, and in return, I'd own a piece of the profits. It felt strange at first, like stepping into a secret room I didn't know existed. But when the business grew and the first check arrived, I felt something different from any other asset I'd held. It wasn't passive income, it wasn't speculation, it was ownership in something alive, something real. Wealthy people scale this in ways the average person never sees. They don't rely on savings accounts, they don't rely on bank interest, they rely on ownership. Ownership in critical industries, boring businesses, cash flow machines, laundromats, storage units, healthcare services, manufacturing, logistics, businesses that operate regardless of stock charts or politics or fear. And suddenly it all made sense. Banks don't promote private business ownership because banks don't benefit from you becoming independent. They benefit from dependence, from loans, from deposits, from debt, from fees. But private equity removes dependence. It gives you multiple income streams, multiple profit centers, multiple ways to grow wealth without waiting for permission. This asset taught me something no bank statement ever could. Banks lend money. Private businesses print money. And once I saw that truth, I couldn't unsee it. I slowly built a portfolio of small equity stakes. Nothing monstrous, nothing flashy, just consistent, predictable, scalable. While the stock market was yo-yoing and banks were tightening, the businesses I owned were serving customers, generating revenue, and paying me my share. It wasn't luck, it wasn't magic. It was the wealthy mindset finally clicking into place. Banks will never tell you this because they want you saving, not owning. They want you depositing, not earning. They want you trusting them, not outgrowing them. But once I took my first step into private business ownership, I understood why wealthy people never fear bank failures. Their money doesn't live in banks. It lives in engines. Engines that run every day. Engines that don't ask for stability. Engines that create it. And that fourth smart asset became the moment I stopped surviving the system and started operating above it. There's one asset I kept resisting until life slapped me hard enough that I had no choice but to understand why the rich treat it as their final line of defense, their emergency parachute, their invisible shield, their last wall between themselves and total collapse. And once I finally stepped into it, I realized why wealthy families stay wealthy even during disasters that wipe everyone else out. This is smart asset number 5, and I call it the untouchable asset because when everything else gets shaken, frozen, blocked, seized, or delayed, this one stays liquid, movable, discrete, and instantly deployable. I'm not exaggerating. This asset saved me twice. The first time was during a 72-hour banking freeze, not a collapse, not a shutdown, just a freeze, a temporary security review, they called it. But imagine this, bills waiting, repayments due, payments stuck, and you're standing there with everything locked while the institution that claims to protect your money treats you like a criminal for daring to move your own funds. Most people panic, rich people pivot to this. I watched how the wealthy around me reacted that week. They didn't argue with the bank, they didn't beg, they didn't threaten. They simply tapped into this asset, moved like nothing happened, and kept control of their life while the rest of us stood frozen like statues. That's when I understood. The real difference between being safe and being trapped is the ability to take action when the system says you're not allowed to. My second wake-up call came when a close friend had his account restricted during a dispute. No fraud, no crime, no mistake, just an algorithm flagging activity it didn't recognize, and suddenly he was locked out of his own money for 10 days. 10 days. A whole week and a half where he could do nothing but wait. I couldn't afford that happening to me. I couldn't afford being helpless. And I couldn't afford living in a world where a bank manager has more control over my daily survival than I do. That's when I decided I'm done leaving everything to chance. Smart asset number 5 became my emergency reserve, the one thing that isn't controlled by banking hours, banking rules, banking moods, or banking crises. It sits outside the system, yet is recognized everywhere. It moves across borders. It holds value regardless of the political temperature. And most importantly, it respects me more than the institutions that claim to keep me safe. And what shocked me most wasn't the asset itself. It was how quietly rich people use it. They don't talk about it publicly. They don't brag about it. They don't announce it. They just keep it quietly, patiently, consistently, because they know one truth. When things go wrong, speed is everything. Not strength, not knowledge, not status, speed. And smart asset number 5 is pure speed. When markets fall, this holds. When banks freeze, this moves. When systems fail, this survives. It's the closest thing to real independence that I've ever had in my life. And once I started using it, once I built my emergency layer around it, I finally felt something I hadn't felt in years, untouchable, Not invincible, just untouchable. Because now when the system shakes, I don't rely on luck. I rely on strategy. I'm going to say something now that I wish someone said to me years ago, before the freezes, before the panic, before the sleepless nights, staring at screens and wondering if my money still existed inside those digital walls. Do not wait until the bank decides your fate for you. People think collapse happens suddenly. It doesn't. It happens in whispers long before the headlines ever catch up. A delayed transaction here, an unexplained review there, a temporary hold email, a declined card that magically works an hour later, a withdrawal limit that wasn't there yesterday. These are not glitches. These are warnings. And most people ignore them because they trust a system that has zero reason to protect them. But I'm not here to scare you. I'm here to tell you the truth I learned the hard way. Your money is safest when you control it, not when someone else promises to. When I finally built my 5-asset foundation, something inside me changed permanently. I stopped living in fear. I stopped reacting. I stopped hoping nothing would go wrong. I shifted into what I call the Carl Icahn mindset. Never wait for permission to protect yourself. I started operating like wealthy people operate, not because I wanted their lifestyle, but because I wanted their advantage: control. Control over my survival, control over my choices, control over my time. That's what this entire journey has been about. And here's my final warning to you. There will come a day, maybe sooner than you think, when banks will not give you the luxury of thinking about it later. When that day comes, you'll either already be protected, or you'll join the millions of people who say, I should have acted earlier. Regret always arrives right on time. Protection only works if you build it before the storm. I don't want you to learn the way I did. I don't want you to wait until the withdrawals slow down, or the freezes start, or the reviews begin, or the headlines announce the thing everyone already felt months before. So here's my personal action plan, the same one I use every day. I diversify across the 5 smart assets like my life depends on it. I refuse to keep all my control inside one institution. I maintain mobility, liquidity, and sovereignty. I stay prepared, not panicked. And I never forget the rule that saved me. Banks are safe until they're not. Assets are reliable until you ignore them. But preparation is forever. If you take nothing else from me, take this. Start today. Start small if you must. Start quietly if you prefer, but start. Because once the doors close, emotionally, financially, or literally, it won't be your fault, but it will be too late. And I refuse to see you standing outside those doors wondering why no one warned you. I just did.